Okay. The last bit of ratios. So, just once again, why they are important to a business is they help us to analyze and measure the performance of the business, the profitability, as well as then the health of the business. And then we are going to do this by calculating ratios by using the information in our SOCI and our SFP. For this session, specifically focusing on SOCI, because we are going to look at profitability ratios. And remember, you calculate your profit in your statement of comprehensive income. Therefore, you can only refer to your SOCI when you are doing these ratios. We are going to comment by comparing the current financial year to the prior financial year, and then what is acceptable. In other words, what is the norm? We're going to say what this ratio is telling us, and then whether this is favorable for the business or not. So profitability ratios is all about, are we making money? Are we making a profit? And the first one that we are going to look at is the gross profit on sales. So in other words, how much profit are we making before taking into account our operating expenses and our finance expenses? And this, what's easy with all the profitability ratios is the formula is within the ratio. So gross profit, you're going to take your gross profit and you're going to put it on sales. So gross profit divided by sales, multiplied by 100 to get this in a percentage. So we want high gross profit on sales percentage. So the higher, the better. And we're going to say that 40% is good, but we will play with the range of 20 to 40. So anything above 20, we will be satisfied, but 40 plus is excellent. We do not want to drop below 20%. And what this is telling us is, like I said, how much profit are we making by then looking at our profits before taking into account operating expenses and interest expense. So how much profit are we making per R1 stock that we are buying when we are looking at our gross profit on cost of sales? So the first one was the gross profit on sales. Now we're moving to gross profit on cost of sales. I will in a bit explain the difference between the two. So now we're looking at only our sales and our cost of sales again, and then we're going to calculate our gross profit. Then we're going to take our gross profit and divide that by the cost of sales, multiplied by 100 to get to our gross profit on cost of sales. And this is going to tell me all about the markup that I achieved looking at the cost of sales and then how much profit I added onto that to get to my selling price. So we want to always have a gross profit that is either equal to or very close to the goal that we had in mind. So we are going to say that our goal is to make 50% profit on all the goods that we sold. So in other words, we're going to start with the cost price, then we're going to add 50% of that cost price to get to the selling price. And we need to be in line with that goal, because if we're not, it could mean that we had to sell our stock at a trade discount just to get rid of the stock. So that's not good, because now you're not reaching your profit markup, and that then impacts your net profit. And that's not good for the business, because the whole idea with starting a business is you need to make a profit. And as the profits go lower, so does the return on equity. So we really need to take care or be careful when it comes to our gross profit and then the markup that we apply on these goods. And we also need to bear in mind that if we need to change a supplier for whatever reason, maybe it is that your supplier closed down or their quality is just not what it was previously, then you need to adjust your profit markup as well. It needs to go hand in hand with your cost of sales, because otherwise, once again, you're not going to reach your profit markup. However, we also don't want this to be too high, because remember, you need to sell quality goods at a good price. It still needs to be affordable to the public. So if you go and just change your profit markup because you want to make more profits, that's being unethical. Okay, so it has to at least align with the quality. So we need to see if this is lower or more or less the same as the prior year or the goal. And it could be that your selling price was maybe too high. So the profit markup that you applied was too high. Then you had to sell it at a discount. So that would result in you not reaching your goal. Could be that you changed suppliers, therefore your cost price is too high, or you didn't make use of bulk purchases, which means that you then had very high transportation costs. And this then increased your cost price. So definitely a lot going on there with your cost of sales, but try to do bulk purchases so that you have less transportation costs, keeping that cost low. And then also don't apply a profit markup that is too high, that's going to result in you having to give your customers a trade discount. So 50% is acceptable, and it is the one that we see most often. And retailers, so in other words, your clothes, and cars, stuff like that, apply markup of 50 to 60% on cost, but obviously it can be higher or lower. So how do we now look at, we have gross profit on sales, but we also have gross profit on cost of sales. So when we're looking at the gross profit on sales, we are looking at only my profits and my goods sold. How much do I have left of my selling price after I've taken into account the cost of the goods? So this shows the percentage of profit before looking at operating expenses or finance expenses. So how much of my sales do I have left after the costs of the goods were taken into account or then considered? So for example, if you have a gross profit percentage of 40%, means that you made a gross profit of 40 Rand for every 100 Rand in sales. So therefore you spent 60 Rand to be able to make this sale if you're only looking at the cost of your goods. Whereas your gross profit on cost of sales is how much profit, gross profit, did I earn on the cost of the goods? In other words, what profit markup did I apply on the cost of the goods to get to my selling price? Right. Then we also have the operating expenses on sales. So in other words, how much of my sales did I have to take to pay or then cover my operating expenses? And this, you can only imagine, you want this to be low, because operating expenses means now I have less profits. So I don't want the operating expenses on sales to be high, because I don't want to spend too much on operating costs. I need to manage my expenses effectively. So we are going to say that if it is below 25%, we have efficient cost control. Then it means that only 25% of your sales figure has to go towards covering your operating expenses. Then if it's 25% to 40%, we're going to say it's not good, but it is still acceptable. But anything above 40% means that you are not managing your expenses well. You need to go and see, can I cut costs somewhere? Maybe you have office space that is way too big. You don't need that big space. Or you want to be there where the rent is extremely expensive. Maybe it's time to downscale so that you can bring your costs down, so that less of your sales goes into covering your operating expenses. Okay, so now you've done your gross profit minus your operating expenses, then you got your operating profit. And now you're going to take that operating profit and see how much profit did I make just from operations without looking at my interest. How much profit did I make on only my sales? So I just added the and income tax, because income tax comes in grade 12. And a lot of the times the grade 12s forget that, remember, if it's before interest, it is also before income tax, but you will see that next year. Okay, so in other words, how much profit am I then making on my sales? And this is by just looking at your core operating activities, operating profit divided by sales times 100, because this also has to be in a percentage. So what does this tell me? Once again, so it kind of goes hand in hand with your operating expenses on sales, because remember there you see only looking at the expenses, how much do I have? Sorry, you guys. Sorry, I just lost connection there. I'm not quite sure where I lost it, but I'm hoping that it was on this page. Okay, so operating profit on sales. How well am I managing my expenses? Am I making profits just looking at the main operations of this business? And then am I generating enough profits for the partners? We want the operating profit on sales to be above 20% because that means that we're making good profits. Okay, so just note the difference here between your operating expenses on sales, right? We want it to be lower because that is looking at your expenses and how much of my sales do I have to use to cover my expenses. I obviously don't want to use a lot of it. We were looking at the operating profit on sales. We are looking at, okay, how much do I have left of my sales? So I want to have a lot of profits left at year end. So that's why the higher, the better. But we're looking at about 20% for a very good percentage. So this is very healthy. And then when we're looking at below 10%, we are going to say that this is concerning. We aren't retaining enough of our sales in operating profit. So it goes hand in hand with your operating expenses on sales. That's, I think, where it cut off previously. Then you now also have your interest expense. And then in grade 12, you also have your finance expenses. So we now have sales minus cost of sales is gross profit minus, or then add to it my other income minus my operating expenses. That gives me my operating profit. So that's what your final profit. Remember, even when you're doing the current account note, your operating profit is not your final profit. You then still have interest income and interest expense. So after taking all of that into consideration, how much of my sales am I retaining as a profit then? And that is what net profit on sales is. So after taking everything into account. So now you're going to look at, am I managing my operating expenses efficiently? Am I managing my loans effectively, that I don't have too much interest that I have to pay there? And then we're going to say the difference between operating profit on sales and net profit on sales should give you an idea of how much you are spending on interest expense. Because remember, operating profit, interest income, interest expense, and then net profit. So if I have an operating profit of, let's say, 30%. Then when I get to my net profit, it is 10%. 20% of my sales are going towards loans, interest on loans. That's not good. It is concerning. You should pay off your loans. Okay, so that's the difference between the operating and the net profit on sales. So if you have 15% net profit on sales, it means that you are retaining only 15 Rand for every 100 Rand in sales. Once again, no specific norm here. It's industry dependent. However, you can look at it the following way. If it is below 10%, you're going to say that you are concerned. This could be either that it's overall bad spending from your side, or that your sales, the markup that you're applying to your sales is too low. Therefore, you're not making enough gross profit. And then from there onwards, things are just going south. But it could also be that it's just your expenses that are too low. And then, like I said, compare it to your operating profit on sales to see if it's not maybe the interest expense that's getting to you here. And then anything above 20%, you will be satisfied, you are happy. Because remember, you need to make profits in order for that return on equity to be a good figure as well. So everything is about everything here is about how much profits am I making for my partners. Okay, so if you have a high operating expense amount, so high operating expenses, your net profit will be lower, because remember, now I'm taking more of my sales to cover my expenses. Then if you are looking at low gross profit, That's where it starts. It starts with your trading section. So if things are already not okay in your trading section, it's going to impact your profit. So from your gross profit up until your operating expenses, you are also going to comment on the operating expenses on sales and then operating profit on sales. As soon as you take into account your finance costs, then you move on to your net profit on sales. Okay, so the higher the finance costs, the lower my profit. Okay, and then that is it now for your ratios. I will still try and get a video done by this evening on how to then actually apply this in an exam setting. If this thing can just stop now.